how to buy your first investment property. So this video is for somebody who already has the money and is ready to buy. You have the money in your pocket and you're ready to invest, but you just don't know how to invest. If you'd like me to make a video on how to make enough money to buy your first property, I can do that, and let me know down in the comments. So if you have the money in your pocket and you're ready to invest, you just don't want to screw it up because you don't know how to take the first step or what the process looks like when you want to invest into your first property. If you don't have a strategy, you can lose big. These are the 3 steps that you should take to buy your first investment property. My name is Oscar. I've purchased 7 properties, over $3 million worth of real estate, and I'm 25. I've done that in the past 6 years. So I've been investing since I was 19. That's when I bought my first property, and it was a house hack with a 4-plex. So today I'm gonna teach you how to pick a strategy, learn the formula based off of the strategy that you pick, and how to find a deal. Not just any property, but how to find a property that actually makes sense to flip or to buy and hold. Real estate investing has changed my life, and you can make a lot of money if you know what you're doing. The first part is picking your strategy. There's multiple strategies in real estate investing. There's flipping, which is buy, renovate, and sell. It's more of a short-term, high risk, high reward, higher profit margin. So you'll make money in 4 to 6 months, depending on how long it takes you to flip the property, rather than a buy and hold, which keep it forever. So you're only making maybe ideally at least $500 per month profit margin in the rental every single month. So it will take longer for you to see a benefit in the rental, but you're getting consistent income, you're getting your property paid off, and there's appreciation. By the time that you're done paying off the property, you will no longer owe anything. So the entire income the property is producing is all profit, plus you have 100% equity in the property. There is another strategy called the BRRRR method, which I've done as well. And this is a mixture of both flipping a property and buy and hold. So you need to understand how both of them will work to be able to implement this strategy, which makes it more complicated. But if you can do that, it can give you the best of both worlds. So what is flipping in general? Flipping is not just buying low and selling high in the market. It's actually identifying, okay, what makes this a good deal and how do you find it? I actually sell off-market properties all over California. So if you're an investor looking to buy a fixer opportunity, whether you want to buy and hold or whether you want to fix it up, I actually have a list of properties where I sell about 40 properties every single month. Fixer opportunities, single family homes, multifamily, commercial, we do it all. So if you're looking for an investment property and you want to learn how to flip a property, I've flipped 7 properties in the past 6 years, and I can teach you the way that I've done it. I also have connections to contractors now that I've been doing it, where I can also help you and get you the resources you need to help you flip a property if you're in California. So please give me a call or text at this phone number on the screen. Call or text me, let me know what you're looking for, and I can help you out find an investment property to help you flip or to buy and hold so you can make your first deal happen. Whether you're looking in Southern California or Northern California, I have deals there, I have properties that you can purchase, and I have resources as far as contractors or connections that you can use to help flip your first property. And I'll be happy to help you throughout the process. Let's get into the first strategy. Flipping is understanding what a good deal is initially, because it's not just timing the market. You can flip at the peak and you can flip at the low. There's always people who are looking to buy. So whether the market is in a bear market and it's low, you can still find comparables of, okay, what properties are selling right now, even though prices of the properties are low and nobody's really buying right now. People are still moving. There's always gonna be transactions happening. So you're just gonna have to base it off of the market that you're in currently. So if there's not many properties moving, just find out, okay, well, what properties are moving and what price are they selling at and what condition are they in when they're selling at. And now you'll be able to work your way backwards. So if there's a property that's selling for $500,000 and that's the average of your city, of the properties, that are 3-bed, 2-bath, and they're selling pretty fast, even though it's a slow market, you're gonna know, okay, that's gonna be the exit price that my flip is desired to be at. And you can start subtracting all of your costs from there to find out, okay, is the good deal if I'm buying it at 300,000 or 250,000? And if your numbers line up, then you know, okay, I should purchase this. And it's better to find the deal, and if you know how to run your numbers, just pull the trigger on the property. Because if you try to figure out, oh, you know, what contractor am I gonna use? Or try to solve all the problems that you're gonna have after you purchase the property before you buy it, you're most likely gonna lose out on the deal. Because investors are pretty competitive. If they already know what they're doing, they've done it before, they will figure it out after. So when I actually bought my first property, or my first flip, I would say, I bought it without even knowing who was gonna remodel it for me. And it actually sat for a month because I was shopping out to multiple contractors to figure out who I would want to use. And that was the way that I was actually able to buy it, because if I would have tried shopping for contractors and getting bids that entire month before I actually pulled the trigger on the property, I wouldn't have got it. Like, somebody else would have bought it. Knowing your strategy, knowing what you're gonna have to, the steps you're gonna have to take, and then just pulling the trigger and buying the property and then figuring it out as you go is how you're gonna have to do it if you wanna get into real estate. You're not always gonna know the answers beforehand. So just pull the trigger on the property that you're wanting to buy once you figured out what strategy you want to use, and once you understand the formula of that strategy that you're going to use. For a buy and hold, it's different because it's not about the price that you're buying it at, but it's about the rental market and the comparables of the property that you're buying. So if you see a property that's a 3-bed, 2-bath that's comparable to the one that you're going to buy, and it's renting out for $3,000, and your mortgage is $2,500 if you buy this property at the price, you know you'll be able to make $500 a month if it's a good comparable. If you are buying it and the mortgage is gonna be $3,500 a month, and if you're looking at the rents around and it's only getting $3,000 a month, you're gonna see, okay, this is not a good investment because I'm gonna be losing $500 a month to rent this property out. Understanding the two different formulas to see which strategy and property will make sense according to your goals. So if you wanna make money fast, if you wanna learn a new skill of understanding how to flip a property, how to comp property, how to actually manage a project, flipping is gonna be a better option because it's a higher risk, but it's a higher return as well. You can make, $20, $50, $100,000 flipping one property in a few months, rather than making $500 a month or $1,000 a month for 30 years before you pay it off. Depending on your strategy and what your goal is, it's not like one is better than the other. It's just depending on what you want to do, what's gonna help you based off of your goals and your circumstance. So for some people, it's gonna make sense to flip to get the higher return, or some people, they want the steady income. They don't care about making money fast. They just want a buy and hold for the long term to be able to make $500 a month, and they're good with that, and just build a portfolio of rentals, and they're making a few $1,000s to eventually replace their income for the long term. So those are two different strategies, but if you want a video on breaking down the exact formulas to flipping, or to the buy and hold, or to the BRRRR method, let me know in the comments below what you would like to see so I can break down for you exactly, giving an example of the properties that I have flipped or the buy and holds that I've had, and I can show you what exactly to expect and what the benefits of each one are. I have also done the BRRRR method, which was tougher because you need to understand how to flip a property, because you're buying it low, you're buying it under value, you're renovating it, bringing it up to value, then you're renting it out, and then you're refinancing to pull your money back out of it, and then keeping it as a long term. So I've done that before too, and it's implementing both methods and making sure that you're gonna be able to get your money back out of it and then be able to refinance it and rent it out to make a profit. So if you want to make fast cash, flipping is going to be better for you. If you want to make passive income, buy and hold is going to be better for you. And if you want to scale and try to implement both, the BRRRR method is going to be the best for you. The second thing is learning how to run the actual numbers so you don't lose money. So sticking to the formulas and actually writing down all of the costs, working the deals backwards to understand if it's going to be profitable or not is going to be the crucial part of this strategy. Because if you're flipping, there's typical rules, like you'll hear about the 70% rule, and the 70% is based off of the ARV, which is the after repair value. So after repair value is the price that you would be listing the property for after it's fully remodeled. It's the maximum purchase price that you will be able to get for the property after all of your costs. And you want to make sure that you're below 70% before purchasing the property and renovating the property. So you understand that you're going to be able to actually have a profit margin. Obviously, you're going to want to break it down more than just that rule because it's bigger than just a percentage. You want to understand what the actual costs are in your market. For the rentals, you'll hear about the 1 or the 2% rule, which is a monthly rent percentage. And 1% of the purchase price or better is what you're looking for rent. So if you're buying a property of $100,000, you want the rental potential to be at least $1,000 for it, which it's obviously going to depend on the interest rate. It's going to depend on a few other factors beyond that. So just understanding your actual costs of the property, the interest rate, and the other factors, what you could rent it for, to be able to break down, okay, am I actually gonna make money buying this as a rental? And the point of this is sticking to the formula so you can have an actual profit margin, because if you do this without a profit margin, which I've learned before, I've purchased a property where I wasn't making much money on. So you do it like that, yes, you'll learn and it's still good to do, but at the end of the day, it's not a good deal unless you're making money. So if you want me to break down these formulas step by step and actually show you what it took to flip a property, or what it took to buy and hold, a rental property, or my very first property that I purchased at 19 was actually a house hack. So I bought a fourplex. What I did was I bought it, I had to kick one of the tenants out, I terminated their lease, I renovated it, got a new tenant in there at a higher rental value, I renovated another one, and then I decided to move in there. So essentially what happened was 3 of the other rents were paying for the mortgage, and I was living in that property in that one unit for free. So it was paying off my mortgage and I was just living there for free, and it was increasing in value as well because I was reinvesting more money into it. So I forced value, and then also the market went up. I got the best of a little bit of both worlds there. But if you're looking for a step-by-step process for each of these formulas, just let me know what you want to learn about in the comments and I'll make a new video about it. Understand what strategy you want to go for, what the formula is for that strategy, and then actually how to find a deal. The third step is finding an actual deal. So not just finding any property, but it has to fit the formula. If it doesn't fit the formula, then don't buy it, because it has to be something that's replicatable. And the way that you know that you can replicate it is by finding comparables. So once you understand your strategy, you can find comps, which are comparable properties to the one that you're looking at. Typically, you'll be able to look online on MLS or on Zillow. I just use Zillow. Is you'll go to the sold properties and you'll put in the criteria of the property that you're looking to buy and look at the recently sold. Most likely something has sold within the past 3 months, and that is the closest parameters and details to the property that you're wanting to buy. And if you look at the ones that are fully remodeled, you'll find your ARV. And if you're looking at the properties that are fixer opportunities that sold like that, you'll find other comparables that have sold for something that's actually comparable to the one that you're looking at if it's more of a fixer opportunity. So if you want to learn how to comp, I can make a video on that as well. But for actually finding a property that makes sense to buy, you can look on Zillow, on MLS, talk to multiple agents to build relationships with people, and mainly try to find an agent that actually deals with investors, that actually knows what an investment property looks like, knows what you're looking for. So it's gonna probably take some time to actually find an agent that is not just a typical end buyer, which is somebody that's looking to own the home for themselves, or just a family that's looking to move in. It's an agent that actually knows how to run the formulas as well and can pick out good properties for you and represent you on that side. If you're ready to buy an investment property and you already know the formula that you want, or if you're maybe even struggling with that, reach out to me, call or text me in this phone number, or send me an email as well with what you're looking to do, how much money that you're wanting to spend, and what area, and I can help you break down exactly how to find a property. Like I said, I also have access to multiple off-market properties. These are all direct to seller, mostly fixer opportunities, so they're better for flips, but we also have multifamilies, and it obviously just depends on what you're looking to do. Really good buy and holds as well. So if you're looking for a property to purchase and you have the money and ready to go, call or text me or send me an email. I'll help you find an off-market property that is undervalued, that fits the formula that you're looking in, so you know it's a good deal. I sell fixer opportunities and buy and holds every single month to investors. So if you're a new investor, or if you're an experienced investor looking for more opportunities, I have off-market properties that are undervalued. So you're not having to compete with everyone on the market that sees them on MLS or Zillow. These are exclusive properties in California that I sell to investors. So please reach out, send me a call or text if you're looking to buy, and I'll help you out. The best place to find deals is looking for motivated sellers. So if you're looking under foreclosures, if you're looking off market, if you're looking for properties with distressed sellers, they're usually in a bad situation. They don't have any money to afford the house. They're going through a divorce, or maybe it's in really bad condition. There's multiple different motivations that a seller would be willing to sell the property fast and for less than what you would find it for on the market. So if you're looking at properties that maybe have tax liens or other indicators of them being in distress, those are going to be the best deals. So when you find an off-market property, or when you find a property that is in a distressed situation, you will most likely be able to negotiate it pretty hard and ask for a lower price than what you would find any other property for on the market. And what you have to do is, when you're putting an offer in, you have to stick to the formula, even if it seems like you're lowballing the seller. If you're putting in an offer, stick to the formula to make sure that it will actually make money. Because if you don't stick to the formula, that's when you start to risk making money and making it a good deal or a bad deal. Because 100% of the properties that you buy are a good deal when you buy them, not when you sell them. So make sure that you're buying it at a good price today to guarantee a profit at the end. This is a property that I just flipped and is on the market now. I'm just gonna show you that so you guys can see what kind of work I do. This was a complete tear down. We had to take it all the way down to the studs, all new electrical, new framing, new windows, new roof, siding, drywall, insulation. Literally absolutely transformed this property from it being a vacant home that the seller didn't take care of it for 20 years, and I bought it and renovated it completely, turned it into a duplex, and it's on the market now for sale. Check it out. So like I said, if you follow these 3 steps, you will be able to buy your first investment property in no time. Let me know in the comments if this helped you out, if this is inspiring you and motivating you to take the first step and purchase your first property. Thanks, guys.